please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Retail inflation accelerates in the month of May, hitting its highest level in 4 months. Industrial output picks up pace marginally in April.
Both are pretty much in line with expectations.
The IIP has benefited a bit from favorable base effect because industrial production growth had really slowed down.
Good thing in the CPI number is that the core momentum seems to have slowed down in the month of May. The way core inflation has now surprised on the upside, it looks very likely that we are in a tightening cycle. Numbers which we need to look out for is the June number, because that is the number which the central bank will work with in the August policy.
Good morning and welcome to Bazaar Morning Call. The market right now is in a mood where it wants to just ignore all the bad news and just wants to move on, and the market's almost at new highs. You are counting the closing basis. And a lot of sectors doing well: Pharma, PSU banks, and of course Reliance. So let's see if the buying can continue. This is Bazaar, of course. I am Anuj, with me Sonia and Surabhi. Good morning.
Hi Anuj, good morning.
Good morning, Sonia. Good morning, Anuj.
Good morning. If Lata was here, she would say, Sonia, you're wearing the right color today.
Yeah, I'll leave that joke to Lata.
Yeah. We are used to that one,
yeah,
right?
that's patented by her. So.
But for the market, Anuj, I mean, we have seen maybe some different leaders this time, right? Yesterday, we saw the pharmaceutical stocks. Not just yesterday. In fact, if you look at the month of June, I mean, Dr. Reddy's, Sun Pharma, Lupin have all gained about 15% or so. The question that even a couple of our experts put out yesterday, Madhukela, etc., that maybe this is the start of a new leadership phase from Pharma, from PSU banks, and now with Sun Pharma getting that additional clearance. Do you get a sense that, one, has the Nifty trading range broken on the upside, and two, has the leadership now changed?
Yeah, what is interesting is that the SGX Nifty is down, by the way. Hang Seng is down. So globally, there's a bit of a headwind once again. The risk rally has not played out. But keep in mind, today we'll have the outcome of the Fed meeting. And anecdotally, Indian markets go into Fed events with long positions. So my sense is that if you get indeed what the SGX Nifty is indicating, in that case, this could be the buying opportunity, because this is now a buy on dips market. That's been well documented. 10,800, which was acting as resistance, could now perhaps start to act as a bit of a support for the market going on from here.
But what has led to that breakout? I mean, is there some reason, or is it just technical factors leading the way up?
I think, A, the market became too net short, and B, I think all rallies were dismissed as short covering bounce. And, quietly, but definitely, you started to see a lot of bargain buying in a lot of names. The kind of delivery buying that you have seen, for example, in State Bank of India for last 3 or 4 days. Yesterday was 400 crores. The kind of delivery buying that you've seen in Pharma names is indicating that it's not just short covering. A bit of a support for the market going on from here.
But what has led to that breakout? I mean, is there some reason, or is it just technical factors leading the way up?
I think, A, the market became too net short, and B, I think all rallies were dismissed as short covering bounce. And, quietly, but definitely, you started to see a lot of bargain buying in a lot of names. The kind of delivery buying that you have seen, for example, in State Bank of India for last 3 or 4 days. Yesterday was 400 crores. The kind of delivery buying that you've seen in Pharma names is indicating that it's not just short covering. Look, let's take each day as it comes for now. But obviously, the mood has changed in 2 or 3 weeks, and it's now looking quite good. In fact, SBI is now the leader for this market, for the Bank Nifty, and the Bank Nifty is within 1,000 points for of a new all-time high. Pharma, my sense is, will continue to see some buying, and this will be one sector where you'll now see dips being bought, because something fundamentally is changing here. It's perhaps in the zone where IT was last year and the second half of last year, and you started to see big buying in that. And as I said, because this Fed decision, perhaps the second half could be good. Just a point on, the sectoral moves. I just present some of the indices year to date. If you see the Bank Nifty, despite the recent rally, is up only 4% in 2018, while IT index is up 19%. Perhaps some money might now move out of IT into banks again, because, the risk on is again picking up. Also, Pharma index is still down 8% for the year, and PSU bank index is still down 16% for the year. This could just be a bit of a trading play on the PSU banks, but that may extend. Also on Pharma, obviously in select stocks, you are likely to see a lot of buying from here on. Perhaps today morning might not be the best time to go and chase Sun Pharma though, because it's rallied over the last 2 or 3 days, and a lot of this is now in the price. Now the next trigger would be when they start to get some approvals from Halul. I think this approval rally perhaps today could be the last of it. If you're chasing it today, you might be, getting trapped.
You spoke about the delivery-based buying, and there was quite a bit of delivery-based buying in IT, in TCS. I mean, ahead of the buyback announcement, we saw almost 700 crores of delivery-based buying there as well. So it was just news flow galore that we saw yesterday, Surabhi.
Absolutely, Sonia. In fact, the point that Anuj made on PSU banks, I just want to put on board that there's a lot going on, and we shouldn't entirely ignore headlines that are coming from New Delhi. Yes, it's a lot of noise at the moment, but perhaps it's that noise also that the market is kind of tracking. You have the RBI governor, deposing in front of the Parliamentary Standing Committee, talking about the need for greater control over PSU banks. So yesterday he actually made a pitch of amending the Banking Regulation Act to gain more control over PSBs. There's a lot of talk about consolidation. Whether it happens or not is a different matter. But again, there was a different committee yesterday, a different parliamentary committee that's dealing with stressed energy assets. And once again, there's a lot of deliberation on what to do with the Feb 12th circular, which was put in abeyance by the Allahabad High Court. But a lot of the members seem to suggest that anyway, it's a non-workable solution. You can't do a one-day default. And the banking secretary is now going to intervene. So at some point in time, we might start getting, harder headlines, perhaps, on a lot of these matters. And maybe that's something that the PSU banks are already pricing it. But Anuj, my question to you is on the other pocket of the market that was in the doldrums last couple of weeks, and that's mid-caps. Is that correction well and truly over? Because we saw a lot of buying yesterday. Today, you have news on the likes of Page Industries. I don't know if that triggers some kind of mega buying and consumption all over again. What's your sense on mid-caps now?
So to be mid-caps, which tend to club it in one basket, that's by nature going to be a space which is going to see big rallies when the market rallies and big correction when the market corrects. So you'll go through these phases. Right now, it's all looking hunky-dory. 3 days of market correction, and you'll again see big correction in mid-cap. But short point here is that a lot of stocks are making new lifetime highs, which is telling you that, this is not a space where you take all or nothing call. You select your stocks, you do your research, and there will always be Page Industries of the world which will keep making new highs. There will always be, Ashok Leylands of the world which will correct and then make new highs. And of course, there will always be the qualities of the world which will, make, highs, and then after that see the correction of a lifetime and destroy the kind of wealth that you will never be able to recover. So, it basically boils down to your own greed and fear and your discipline about, investing into mid-caps.
Okay, well, let's do one thing. Let's also get a couple of more wise experts to tell us how to approach trade this morning. First up, we have Sean Darby of Jefferies, who said with the Fed, Bank of Japan and ECB meeting this week and the US 10-year attempting to breach 3% again, investors should once again consider convertible bonds within their global asset allocation. Fortunately, he adds, supply is no longer a problem. He says the bottom line is that there is a certain late cycle feel to asset markets as the central banks move away from quantitative easing and normalized policy. He says convertible bonds offer a neat protection to higher rates and also exposure to equity markets.
Okay, let's get you some money market views as well. Pramit Brahmbhatt of Veracity says ahead of the FOMC meet outcome, he expects the rupee to be range bound. He says the trading range for the spot USD INR pair is seen between 67.20 to 67.80. That's a large range actually.
And for the bonds, Dhaval Dalal of Edelweiss says bond market participants are likely to focus on the outcome of major central banks this week for rate hike by the FOMC and reduction in quantitative easing by the ECB and Bank of Japan. He says markets will also focus on the cues for further moves. He adds that the May CPI was largely in line with expectations, but core CPI is grinding higher and that should keep the RBI on the edge. He says the banking system liquidity remains comfortable as of now, but may reduce in the second half amidst tax outflows. He also expects the 10-year benchmark bond yield to remain around 8% in the near term.
All right, those are all the local cues, but now let's put the spotlight on what's making headlines around the world. Yes, we're moving beyond the bonhomie we saw in Singapore to central banks. Manglam has all the details. Morning, Manglam.
Absolutely. So all through yesterday, while we were talking about the bonhomie between Donald Trump as well as Kim Jong-un, the view of the experts was this does not cause a big flutter in the equity markets. And that is something that we saw across the US markets as well. The only index that outperformed was NASDAQ, up 0.6%. By and large, everything else was flat. In terms of individual stocks, keep an eye out on AT&T and Time Warner because the US judge has given a go-ahead for the company's mergers. And AT&T lost in after-hours trading, while Time Warner is up 5% in after-hours trading. The focus is now shifted to the central bank meet. Remember, we have the US FOMC meet tonight. Consensus expects a 25 basis points rate hike, so that is something we will be watching out for. Across the Atlantic, European markets too absolutely flat. Just look at the DAX, 0 unchanged out there. A mild red seen on FTSE as well as the CAC. And out there too, we have the ECB meet tomorrow. The street will watch out for commentary coming in on the QE exit. That's not all. In the Asian markets, there is an important central bank meet on Friday, which is the Japanese central bank meet, but the South Korean markets, they're shut. Nikkei is outperforming. Shanghai, Hang Seng, both of them lower in trade along with the other Asian indices. The outperformance of Nikkei can be attributed to the fact that the yen is weaker. Good news for their exporters. The street expects no change in the BOJ meeting, which is on Friday. The SGX Nifty indicates a tepid start to trade. Let's see how it pans out.
Okay, Mangalam, thanks a lot for that. Jeff Lewis is with us now from Manulife Asset Management. Jeff, good morning.
Good morning.
So, your thoughts on what the Fed is likely to do, and more importantly, your sense of how emerging markets are positioned right now?
Right. Well, with regard to the Fed, I mean, last year they did what they said they'd do. They hiked rates 3 times. I think we're on track for similar this year. So Fed funds target rate being moved up 1.75 to 2%, and that's exactly what the market expects. And after such good economic numbers pointing to continued strong growth, the Atlanta Fed is looking at 4.5% for the second quarter, then there is no reason to hold back. So what people will be looking for is the statement. We know that Chairman Powell has said that there should be a little bit less reliance on forward guidance now that we're probably over halfway towards the Fed's idea of the neutral or equilibrium long-term rates. And I think there's some expectation there could be some change in the forward guidance language about the Fed funds remaining below the long-term rate for considerable time. That could actually be dropped, perhaps, and there'll be a technical adjustment in that the interest on the excess reserves will probably only go up by 20 to 25 basis points. So the Fed is on track. Emerging markets seem to be stabilizing a bit, and that's quite encouraging, and possibly they'll take their cue from Wall Street and the S&P, where we're actually seeing quite good technicals recovery in breadth, seeing leadership in some of the same risk-on sectors. We've seen strength in the transport stocks. So all in all, I think we're recovering from some of the turmoil that we saw last month in May.
Okay, so the emerging markets are stabilizing and the Fed is on track to raise rates. Jeff, hi, good morning. Good speaking with you. You know, this year, India has actually done better than the MSCI Emerging Market Index. I mean, the Indian market is up about 3%, while MSCI Emerging Market Index is down almost about 1% or so. Do you get a sense that this outperformance that India has seen could continue? And particularly, what kind of moves do you expect for the Indian market?
I think, yes, India underperformed earlier in the year, and I think oil was a factor. Now the oil price has moved back a bit, and we've seen India outperform over the last week. So it's one of the markets that we still like. Of course, we've got the election coming up next year, and there have been some comments about the fact that the BJP might face a united opposition front in some states, but I think it's always difficult to forge election alliances. So, and it's too early really to be focusing on the election. I think there's a lot's going to happen before then. With regard to the economy, we've seen a little bit of inflation pressure on the core side, and we've seen the RBI react with a rate hike. I think probably there's another 25 basis points due. The main question, as ever, is going to hang on corporate earnings. Are we actually going to see the inflection point? Will we see an end to the downward revisions?
Jeff, just back to the US for a moment. These days, stock has moved from 3 hikes to whether we'll see actually 4 hikes this year. Is that in the market price at the moment? Could that at all dampen sentiment with respect to US equities?
Looking at the expectation in the market from the forward rates, it's not in the market. And some have been saying that it could actually, this view that there could be a 4th hike could actually act as a constraint on some of the Fed governors when they hand in their dot forecasts, because those who are in the median bracket will be aware that if just one of them was to change their view, then that would shift the whole dot plot to suggest 4 rate hikes, and they may not want to give such a signal at this particular point in time. I think there's a growing number of people who have been saying that maybe the Fed will be more aggressive. That's not our view, by the way.
Okay, all right, Jeff, we'll leave it at that. Thanks so much for joining us and giving us your view. So that's a word coming in on what the Fed will do. They will stay true to their course that will hike, that is, they will hike rates by about 25 basis points, and they're quite bullish on emerging markets as well. Here's a quick programming reminder, though. Our special series, Hunting for Value, will focus on one stock today that has corrected more than 30%. Hi guys, welcome back. We wake up this morning to slightly negative cues across the Asian markets. That's because stocks in Asia are pulling back ahead of the Fed meeting. The dollar has strengthened as well, so bad on that. And the SGX Nifty is slightly in the red right now. But our research team is here to give you the list of top 10 stocks to watch as we head into trade this morning. So let's welcome all of them. Anuj, what are you looking at today?
So, you know, Sonia, in poker, there's a term called all-in. When, you know, you go all-in when you think that you have the best cards. I think Pharma perhaps right now is going through that. Once again, you know, perhaps not to chase Sun Pharma, but I mean, if you look at stocks like Glenmark, Divi's Labs, just 2 of the stocks, but both, you know, bouncing back from 200-day moving average, breaking important resistance channels, both seeing big delivery buying. That's, of course, Glenmark Pharma. But even in case of Divi's Labs yesterday, 45% delivery buying and a big jump from the 200-day moving average. So perhaps sectorally now you have to, you know, put your focus on Pharma, lock, stock and barrel, and see if, you know, you can eke out some gains from here on as well.
Okay, so Pharma it is. Let's move to the next one. We have Rima joining in. Big news coming in from TCS. They're looking at a buyback, Rima.
Yes, a buyback on the 15th of June. If they do a 10% buyback, then they can go up to 8,500 crore. If they take the shareholder approval and make the buyback of 25% of the outstanding paid up equity and, you know, free reserves, then the size of the buyback can be close to 21,000 crore rupees, which is 3.1% of the outstanding equity. Promoter holding is at 72%, and like we saw last year, they are expected to participate because this is the cash cow for Tata Sons, and Tata Sons could use the money for its other group companies. This will be the second buyback from the TCS stable. Last year, they did a 16,000 crore buyback at a price which was at an 18% premium to where the stock was quoting, which was roughly about 2.8% of the outstanding equity. In other important business news, from their deal with M&G Prudential, a UK-based insurance company, has gotten expanded by close to about $700 million. So a deal boost as well for the company.
Okay, Rima, thanks a lot for that. So that's TCS. Well, if you read Ekta's pinned tweet in time, you would have made a lot of money on Sun Pharma. Ekta, and now, of course, the news is official.
Yes, absolutely. Well, now this is a stamp of approval coming through from the US FDA. First, it was obviously when they had upgraded the status of the plant to a voluntary action indicated status. But now Sun Pharma informed the exchanges last evening that they have received that coveted establishment inspection report for Halol. Now, remember, an EIR can go negatively as well. But the Sun Pharma management has clarified that all of the issues contained in the warning letter in 2015 now stand resolved or addressed. So that means that Halol is in the clear, and hence you can expect both Sun as well as Spark to be in the green. Spark because there are drugs such as Ellipsia and Zelpros that were just held back because of the manufacturing issues at Halol. Now the street will be much more optimistic.
Okay, Ekta, thanks a lot for that. So that's Sun Pharma been the big mover lately. But let's do one thing. Let's also talk about some news flow that just came in last evening, where the Ministry of Housing and Urban Affairs has approved the revision of the carpet area for houses eligible for the interest subsidy under the Credit Linked Subsidy Scheme, or the CLSS, for the middle income group. So this will make affordable housing cheaper. The carpet area for the middle income group has been increased from 150 square meters to 200 square meters. Of course, housing finance companies would be in focus this morning. KK Mistry, the Vice Chairman and CEO of HDFC, joins us on the phone line. Mr. Mistry, good morning and thank you so much for joining us. Just wanted to understand from you what kind of a boost this would be for affordable housing in general.
See, in the scheme, there are three categories of properties. One is, or three categories of customers.
Sure.
One is borrowers in the economically weaker section. Then the second is in MIG 1, and the third is MIG 2. MIG 2 is the middle income category that we're talking about. Now, in the MIG 2 category, there were three conditions that had to be satisfied for a person to avail of the subsidy. The first condition was that he should not be owning any other house at that point of time. The second condition was that the size of the dwelling unit had to be less than 150 square meters, which has now been increased to 200 square meters. And the third condition was that the income of the individual has to be less than 1.8 million or 18 lakh rupees a year. So these were the three conditions. Now, the 150 square meters area would have been a constraint in some of the smaller towns. Because if you know, in smaller towns, people generally tend to stay in bigger houses because land is more easily available, land prices are lower, and people generally construct larger houses. So those category of customers who would not have been eligible for the benefit because of the restriction on the area of the dwelling unit will now become eligible by virtue of the 150 square meters becoming 200 square meters.
Mr. Mistry, sir, morning. I think it was a couple of months back also when we had a tweak. That was the first round of relaxation on the CLSS scheme, and now we have this one. How would you rate its success for the MIG 2 category? And now, what is the additional boost that housing finance companies can hope for?
See, the scheme per se has been very successful because obviously if someone is getting a subsidy, first of all, how does the scheme work? In the MIG 2 category, which I was talking about, I mentioned the three conditions that need to be satisfied. But if these three conditions were satisfied, then on any loan that person takes to buy a house on up to 1.2 million or 12 lakh rupees, there would be a 3% subsidy which would be provided by the government for the life of the loan. And that subsidy amount will be discounted to its present value and paid upfront to the lender. So effectively, that works out to about 230 to 250,000 rupees of direct cash benefit that a customer gets. Obviously, it's a decent amount. It's a big amount. And to a middle income or a lower middle income person, such a big amount being received is a big boost and a big encouragement for him to buy a house. So if anyone was looking to buy a house, this is the incentive that you need, that this is the right time to buy a house.
Okay. How has the repayment from the government been so far in terms of subsidies, and how many claims has HDFC made under the PMAY scheme?
Not have an exact number of the cost, but it's been a decent number. I would say, and I would be speaking very, very approximately, about 20% of the customers who take a loan become eligible for this benefit.
Okay.
And the payment from the government has been pretty prompt. So you give the details at the end of the month and you get the subsidy, you get the amount pretty soon. The moment we get the amount, we credit it to the customer's account. When we credit it to the customer's account, effectively that's like a part repayment of the loan that he has to pay.
Okay. Okay, Mr. Mistry, thanks a lot for your time today and quick thoughts on this. Let's see how the stocks react. Of course, there's a bit of a, risk. A lot of people talking about the fact that perhaps in this space there is a bit of a subprime kind of issues emerging in the housing finance. We saw the correction also in this space. But let's move on. Mangalam, you're watching out for Page Industries?
Absolutely, Anuj. So the company yesterday, Post Markets and an Exchange notice said that they've extended their license with Jockey for the next, I think about 22 plus years, because they've extended it till 2040 December. So in a sense, Page Industries is saying that till 2040 is Jockey or nothing. The key headwind that the street was worried about is now out of the way. Focus shifts to the higher realization, higher margin products like women wear, leisure, as well as sports. For all of them who are saying that, the stock is at a record high, trades at two-year forward earnings of 50 times plus. Remember, it's been a 70 bagger over the last 11 years. And if money chases return on equity, the last 10 years, the return on equity of the company has been in excess of 50%. And the management rarely speaks to the media. The last time they spoke, sometime last year, they said for the next 20 years, they foresee growth of 20% per year. So visible growth, high valuations, and the key headwind out of way we need to keep an eye out on Page Industries.
Okay, Mangalam, thanks a lot for that. If you're having a bad day, just imagine there were some people who would have bought Page Industries in IPO and on the day of the listing would have sold at discount to that
because
IPO.
of the way it fell on the first day of
Exactly.
listing, right?
And now feel good about it. Of course, you know, there's a nice tweet from someone that now, you know, brokerages can value the stock on 2040 earnings, just like they did DMart, you know. So.
Well, you know, Anuj, you spoke about the IPO. If you invested in the Page Industries IPO, 360 rupees was the issue price, 15 was the lot. You would have paid 5,400 rupees. Today, those 15 shares would have been worth 3,70,000 rupees. So underwear worth a designer suit after so long.
Okay, that's well put. Thanks a lot, Mangalam, for that. But there's something more you can feel good about. You know, Relgio has made data a bit more cheaper. Rima tells us that now 1 GB of data will cost you just less than 2 rupees, Rima?
Yes, and this would compare with what, close to 10 rupees maybe last year, towards the beginning of last year. So yes, data prices have come down significantly ever since Jio's gotten aggressive, and that's been followed suit by the other players as well. So Jio yesterday has announced that for all the prepaid plans, they will be providing an additional 1.5 GB of data per day. This is a limited period offer valid only till the 30th of June. Not just that, they will also be providing a cashback. So if you're doing a recharge of over 300 rupees, then the cashback is 100 rupees. If you're doing a recharge sub 300 rupees, then it's a 20% cashback that you will be getting. So all in all, good news for consumers, bad news for telecom players like Bharti and Idea.
All right, thanks very much, Rima, for getting us those details. Well, we have some news coming in on HDFC Bank as well. It seems their fundraising plans might soon land up at the cabinet for approval. Sapna Das has more details in this story. Sapna?
Well, we are clearly getting to understand that the cabinet nod for the HDFC Bank's fundraising plans is expected anytime now. The expectation has been that probably it may come as early in this cabinet, in today's cabinet. However, if not in today's cabinet, we have been given to understand that probably by next week this matter should be over. Now, just to give a bit of a perspective on this, basically it's a huge fundraising plan by HDFC, which the decision had been taken by the company at least 5 to 6 months ago. Since it basically involves an investment of about 5,000 crores, which will also involve foreign investors potentially, that's the reason why the cabinet nod is required. So it's basically a technicality from the government's point of view. The second aspect that we have been given to understand also is that probably the government just wants to make sure that in terms of the the fundraising plan, the bank stays within the overall FDI limit of 74% for the banking sector. So this is what it is. So expected in today's cabinet. If not today's cabinet, then probably in the next cabinet.
Okay, I assure you there are many more stocks that are in the news, and we're going to talk about that in a bit. But first, our top 10 list, stocks expected to gain today. Glenmark Pharma, Divi's Labs, TCS, Sun Pharma, Spark, Page Industries, Indiabulls Housing Finance and HDFC Bank, while stocks expected to be under pressure, Bharti Airtel and Idea. How times have changed. Less than 6 months ago, the pharma stocks were all in the losing list, and now there's a big turnaround there. Let's take a quick break. Our technical experts join us on the other side to talk about the technicals of the market, of course. But later on the show, we'll also interview one of India's biggest fund managers, S. Naren of Pro ICICI MF. Remember, he's been advising investors to be cautious for the past 1 year. So stay tuned to Bazaar.